Welcome back, traders. Today is Tuesday, September the 2nd. About a week ago, we started talking about the timing component of current price action and how a pullback, some bearish behavior was likely to show up either last week or this week. Well, between last Friday's drop and today's move, today's down move, this certainly qualifies. Got a pullback today, so the timing lined up almost perfectly. So the question is, where to from here? We'll circle back to this daily chart at the end to look at what the short-term and the long-term paths might be. So coming into the day before the opening bell, I reminded subscribers of that timing aspect on the weekly chart. Price was already getting dragged down in the pre-market. The bears were making a stand, so this meant we could expect increased volatility right out of the gate. And with increased volatility, you've got to be more selective. So levels that normally act clean can get spiked before reacting. That's why I stressed having multiple reasons to trust the level before trading against them today. We also talked about the line in the sand at 640. Staying below wasn't all that good for the bulls, but at the same time, there are plenty of bulls still looking at 650, like thinking maybe there's unfinished business up there. So that's a recipe for a tug of war. Wide swings were possible, and a day where discipline mattered more than prediction. So on top of all that, there was a PMI data release set for 10 a.m. Eastern. That's another wild card. With the way that price was already moving in the pre-market, we expected that release could throw some fuel on the fire. So this is what we had going into the day before the opening bell. A lot of levels, but we had a pretty good game plan to work with. Here's the 1-minute chart. Let's look at how it actually played out strictly by the rules. So the first trade at 637.71, they came up into it really fast. That would have triggered the trade, but acting fast, that's a near miss of the profit objective. They pulled back just shy of your 4-point base hit in the minis, jumping out at your break even. There's a plan, that's a wash. Same story up at 639.25. As you can see, this whole area did provide overhead resistance. It just took some time, but it was pretty much the same thing. Near miss, didn't quite give enough to get a base hit. They pulled higher. You don't really know what they're going to do at this point. So jumping out close to your break even would be the plan. If you allowed for a little more wiggle room, which was fair game given the volatility, this could have been a base hit or more as they fell back down. Personally, I was in this trade. I went short here, but I bailed out too soon. Didn't really have the time this morning to set up properly. I knew I couldn't babysit the trade, so I stepped away after that. Lost a little bit of money there. 637.71, recycled trade. So this is kind of a big one that gave some points back. If you went long there, it ended in a 12-point fumble, but then you would have recovered with a base hit on the reversal as it came down, possibly more if you're willing to give them some room. So net negative, but that's part of the process. 635.57. That was a clean base hit as they pulled out of there. No rules violated. We're not going to touch these other levels on their way back up because they've been traded already. And they got to 640.28. It's toward the end of the day. We're not trading within the last 30 minutes of the regular session by the rules. A little bit of a reaction there, but no trade. So if you treated the whole day as a rules-based process, you would have walked away with 2 base hits, a wash or 2, and a fumble that netted out to about a negative 4 points for the day. Not ideal, but manageable. For me personally, I only got into that short up at 639.25, as I said. I was looking for more than just a base hit, so more than 4 points. But when price popped back up, I didn't want to sit around and play defense all morning just in case the bulls were stronger than I anticipated. So I closed out for a small loss and stepped aside. Too much going on at the office to stay sharp and focus. So here you go. Short 4. When they pulled up, I just jumped out, closed out. It was about a little bit less than 3 points. And I stopped this. This recording actually went for the rest of the day. I was away from my screens pretty much the entire day. But I just went ahead and stopped the video, or stopped this video post, like the post editing, at around 12. There's really nothing to see. Didn't take any trades. And this just to save some time and some space. That's pretty much the morning of my trades. Over on the tracking logs, the playing by the rules log, you can see the 2 base hits, the 1 fumble, net negative 4 between those trades. You can check out the metrics based on that. And the Sam's trades, a net give back of 2.8 points on 4 contracts, $560 before commissions. Back to the daily chart. So where do we go from here? So today's close was above 640, slightly. So that still might carry some psychological weight, but we need to remember that the whole timing component that we've been tracking was based on the weekly chart. So looking at the weekly chart, it doesn't really look like a big pullback, kind of barely shows up. Doesn't really look significant. So the question is, was that it? Was that the bears move? They're going to go for a more meaningful pullback. They're not overly extended at this point, but this timing thing played out a little bit so far. So for context, back here on the daily chart, The 50-period moving average plus a zone maybe about 30 points or so below it could be an interim target if the bears press lower. And on the upside, we have new resistance areas, including the gap from Friday where they closed, and a zone between 641 and 642, roughly. If the bulls can get back above that area tomorrow, they might try to turn the tide and mount another push higher. But there will be some resistance there. So the tug of war continues, but the weekly chart says we're still in the timing window for a bigger move, possibly later this week. So we'll see if the bears can seize that opportunity or if the bulls can hold the line and keep 650 in sight. That's pretty much all I'm going to say at this point. There will be more precise levels, hopefully, based on what we see between now and the open tomorrow. And we'll just keep trading those levels per the process and just let the cards fall where they may. So that does it for today's recap. I appreciate each and every one of you who are following this channel. I hope this futures trading approach and these market recaps are helpful to you. Thanks again, and I will talk to you again soon.